Is corporate South Africa packing up and leaving home? There's been a wave of announcements this year alone that suggests that large companies are further orientating towards global markets and away from South Africa. Well, Economist Cees Bruggemans says that many of them are putting their home assets on care and maintenance. He echoes the concern of many business groups that say, why would you invest in South Africa when you have no idea what's going to happen next? Well, we're now joined by Cees Bruggemans in studio. Great to have you with us, Cees. So we need more investment, clearly. We know that business is sitting on piles of cash at the moment, but you're saying it's worse than that. They're not spending here, but they are taking their money elsewhere.
It is a simple question of making money, and the domestic economy is just growing far too slowly, so it doesn't create the opportunities for all businesses together to invest the cash and the capital that they have. Compared to so many other countries overseas on the African continent, but also further afield, where there is much higher growth, much faster than we have here locally, where the investment opportunities are there and where the local companies can find a base. And what we have found that where in olden days this was exceptional, the last 5 to 10 years we see more and more companies making the decision that the home base is too limited, is too restricted, the earnings opportunities are too limited, while they can substantially increase their sales, their turnovers, their returns by going to other countries.
Would this include Anglo, its subsidiary Amplats, selling mines here, speculation about Lonmin as well? So maybe they're taking that capital they would have kept in South Africa, moving it abroad, and what's happening beyond the mining space?
You're focusing now very much specifically on platinum that has gone through a major problem period.
So should we separate that out?
We clearly have a reorientation where those specific companies may want to grow their businesses elsewhere in the country, and that will be very cash intensive. So for them it is not a matter, I think, of so much going outside, also because the deposits are in this country. But I more specifically talk about other sectors of the economy where company after company makes announcements that where up till now perhaps 10 or 20% of their sales turnovers are overseas, 80-90% is still locally. They give you indications that on a 3-year view they want this to be 30 or 40%, and on a 5-year view they want this to be 50% or more. This is very much internationalizing of the local businesses, but the real reason behind it is this matter of home is growing too slowly, it is too limited in its opportunities, while there are far more opportunities overseas, and the business then naturally shifts.
But we saw today Europe is struggling. Interest rates are low. Aren't we relatively attractive to a lot of markets right now?
Relative to them we may be attractive, but relative to a growth rate of 5-6% in Africa, and in parts thereof faster than that, or in Asia, or even in parts of Eastern Europe. Poland, for example, is an outperforming economy. I wouldn't expect so much to see us going into Latin America. But there are many countries in that respect then that remain attractive, also in the long term. And when a company is looking for an alternative, it finds them.
Should we be very worried? Because you've also spoken about the risks associated with South Africa. So I see it that there are two factors here. There's the kind of pull factor, because Bidvest announcing it may list its food services in London because it can raise a lot more capital. It wants to head into the US. So maybe that's positive if it's growing, or are there push factors as well?
It is a matter of not so much these companies moving is a concern as the reason why they are moving. In other words, if we were to perform better in this country, we would have a higher growth rate. There would be faster sales opportunities for local companies. They automatically would be investing more of the capital in this country, and the attractiveness of other countries would become relatively less appealing. But it is because of the overall underperformance that we are experiencing that companies make the shift. So it is not the shift itself that should actually be addressed. It is the overall performance of the country. If we are experiencing a 1.5% growth rate, while we should be doing at least a 3.5% growth rate, and in good times we could be doing a 4 or 5% growth rate, then we must understand we are underperformers. And when it comes to businesses assessing us, if it is your short-term they may look through that. But if it's starting to become medium term, longer term, many years ahead where they sense that this condition is going to remain, they automatically start to reallocate. It also means they can come back, or rather put the emphasis back into the domestic market, the domestic economy, provided we actually perform as a country.
You, like many others, have raised concerns about a lack of certainty in the economy. So that points to what government is doing right now. I want to ask you, it has been put forward that maybe we're also going through a positive shift, because we've seen a lack of transformation for years. We've seen companies come in and be exploitative. So government's trying to limit how exploitative they can be. I mean, if we look at Walmart coming in, you have to support suppliers. And we've seen companies that can easily up and leave. Are there any positive benefits to government maybe being more assertive about its conditions around business investment?
You will see that in every sector, and every company will respond differently. But as long as the roll call continues, that companies announce that they're looking for higher turnovers, higher earnings shares overseas or in other countries, it is a vote of confidence, if you wish, in the statements made by the government or in the things that government is doing. So to try to judge or give an opinion as to what government is doing and whether it is good or bad, compared to simply looking at the evidence of what these companies are showing, if they have a belief, if they have confidence in what is happening in their sectors, believe me, they will invest locally. But if they have uncertainty and it lasts too long, you find the evidence shifting outside.
They're voting with their feet. What are the implications? You say by 2020, only a small minority of our listed companies will still be South African owned or based here. What does that mean in simple terms for the South African economy?
Okay, you're slightly overstating. In other words, we are shifting continuously, and a majority of activities, which means more than 50%, could be overseas, given the kind of targets that companies are setting themselves. And that is taken a 5-year plus indication. What it means is that although South Africans will probably remain in the main shareholders, although foreign shareholding in these companies is also increasing, and therefore we are also benefiting in the dividend flows, the earning flows that are coming from overseas. The fact of the matter is that if a company is investing overseas and it creates capacities there and it creates jobs there, it is that country, it is that society that gets the benefit, and we lose out, relatively speaking, because we are not getting those investments, we are not creating those new jobs that we could be getting. And that is something to bear in mind, because we tend to now embed, we're making it nearly automatic that the stagnation, the slow growth continues. Because the more our companies continue wanting to go out, the more this process becomes self-reinforcing. For them to have the confidence to invest locally would help us to up our game. But that is the difficult bit, to create sufficient confidence that people have certainty in the future in terms of the turnover growth that they can expecting, the cost levels that they can be expecting, the kinds of regulatory burdens they may face. The less confidence on that score, the greater the opportunities elsewhere, the more likely businesses to shift.
It has been said maybe we should celebrate the SABs and the MTN. They are expanding, but maybe for other reasons. It's not a lack of certainty at home, it's not risk, it's just massive opportunities across the world. So are there instances where it's really positive because those earnings do flow in, and they do still create jobs in South Africa?
It is not as if companies are actually pulling up. They're not an immigrant as such. They continue with their businesses locally, and they merely respond to what is being offered to them locally. But in addition to that, they have means, they have capital, they have talent, they have energy, and they want to deploy that. And for that, they go to other countries. It is not every company that is acting in the same way. You've mentioned examples where some maybe a bigger presence locally compared to another company, which will give you a different story. So you have to examine the circumstances of every sector, of every company, and the countries that they go to. It is the broad trend that sends its own message. The trend has been with us for about 5 to 10 years, but it is intensifying. And if you project it 5 to 10 years forward, logically, the structure of things continues to change.
So I guess my final question, and what I'm trying to get at, is how depressed should we be about this?
We should take it as a vote of no confidence in our performance. In other words, if we are reporting growth numbers of 1.5%, that is just not good enough. That is like getting a 2 or a 3 in class, while you should be getting a 4 or a 5 or a 6. We should be having growth numbers of 3%, 4%, 5%. We should be creating jobs at a terrific pace. We should have the confidence of doing that. And that is as much a public sector as a private sector thing. The reality of the matter is that that confidence is not there, the performance is not there for many, many reasons. And that is something to be concerned about, because these companies are telling you that it is not just a short-term phenomenon. They're looking into the future and they say we have to spread our means.
All right, so everybody across the economy has to up their game. Thank you so much for your analysis. That was Economist Cees Bruggemans.